I know. That weekend can't last forever, though, right? Hope you guys had a fantastic holiday, but it's about that time of day again. It's about that time of the week. Time to get back to work. We're going to make some money here this third week of the month of January. It is Tuesday evening. I know it feels like a Monday, right? Tuesday evening. It's the 18th day of January 2022. My name is Joseph, and as always, welcome back. Welcome back to our nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Wednesday's trading session. I got a great video in store for you guys tonight. Charts are all ready in the background. As you can see, got the S&P ready, Nasdaq's ready, oil is ready, and glad to see you are ready right along with us. Boy, tons of great trades setting up for Wednesday's trading session. As you can see here on the charts here in front of us, everything besides oil is bearish, right? Big bear move down on the S&P, big bear move down on the Nasdaq. You know, we got some big moves lower here today, almost record-breaking moves down here. You have to think that sellers are going to be looking to short into any bounces here right now. We got plenty of areas of resistance here for us to look to sell into those bounces. S&P and Nasdaq are very similar in that sense. As you can see, there's one big variable on the Nasdaq, which is that trading range. So we'll talk kind of why that's important and how it's going to change how I'm going to trade the Nasdaq tomorrow. But Nasdaq's definitely bearish. S&P's bearish. We'd love to sell the bounces here on the E-minis. And of course, you know me, we'll talk about how to trade some reversals, but this is definitely not the time to pick a bottom on the S&P or the Nasdaq right now. I will talk about, though, what a reversal will look like to keep it on your radar for tomorrow. And of course, as you can see, the oil just continues. The word is out, right, with the tensions, between Ukraine and Russia right now. The word is out right now on the oil. Got some big winter storms coming, so we're definitely bullish here on the oil right now. Now I'll tell you, there's no reason why we can't be looking for some shorts back down into this range, waiting below us. But we got to make sure we stay patient for the right short signal here. We'll talk about kind of when the time is right to short this thing back down into that 84 range. We'll also talk about, you'll notice we're kind of getting into some areas of resistance up here. We'll talk about the best way to buy this thing on a pullback, because obviously it's a very, very bullish right now. So we'd love to buy some pullbacks here. But, we'll talk about when those pullbacks maybe turn into full-blown reversals. And so we'll go into detail on that. Not to worry. By the end of this video tonight, I'm going to talk about all my favorite trades setting up for tomorrow. I'm also going to go over some stuff that I'm going to try to avoid, right? Hopefully you can avoid, to keep yourself out of trouble, keep yourself in the green, whether you're trading on your own or you're trading with us in our daily trade room. Now, speaking of tomorrow's a Wednesday. It's going to feel a little bit odd, right? Because Monday, of course, was a holiday. And once again, happy MLK Day to all you guys out there. Hope you guys had a restful holiday. As we look at the schedule for the rest of the week here this week, there really isn't much that we would anticipate to move this needle or to move the needle until we get to Thursday morning for that Philly Fed Manufacturing Index. You'll notice there are no Fed speakers. This is the week before the FOMC announcement. That'll be next week. So Fed speakers are in their blockout period right now, right? So, we get some housing starts tomorrow at 8:30, but I doubt that's going to make a very big impact. I would imagine unscheduled news tomorrow, any slippage, any slip-ups at the Fed, any new escalations, right, between, Russia and Ukraine, which by the way, is usually nothing. Every 8 to 10 years, they kind of, whip up this tension, between Russia and Ukraine. The last 2 or 3 times it happened, it didn't add up to anything, right? But, they're trying to kind of whip that into us, get the oil price going right now. So, again, we'll be listening in for any unscheduled news tomorrow, but there really isn't much for us to worry about as far as scheduled news. Now, remember, we open up our trade room at 8 o'clock Eastern time every morning. I would love to have you there trading right along with us. What I'll do is I'll put all the membership links, all the important details you guys need below this video in the description. So grab those, get registered, and I'll see you guys tomorrow morning, 8 o'clock Eastern time. We'll trade this stuff together. So no major news tomorrow morning. I wouldn't worry about the 8:30 news. We'll come back tomorrow night. We'll talk about how kind of the game plan for that Thursday morning. We'll be a busy Thursday. You can see we get the oil report, get the Philly Fed. So you definitely don't want to miss tomorrow night's video. We'll talk more about how to get ready to trade that news on Thursday morning. In the meantime, though, let's get ready for Wednesday, right? Wednesday is right around the corner here. S&P, Nasdaq are both bearish. Oil, of course, is bullish. Why don't we jump right in? Let's jump right into the S&P here to get this party going. Like I mentioned in the introduction, there is a ton of bears in this market right now. There are probably three, main components on this chart that will kind of lead the way to tell us how I'm going to be looking to trade this here on Wednesday. You can see here 1, 2, 3 legs down here right now for those bears. Let's see here. First thing, I think probably the most important clue we're seeing in the chart right now is this spike in channel. You'll notice we basically kind of fell out of bed right out the gate this morning and pretty much just rolled lower with this spike in channel. Now, spike in channels are really important. In my eyes, they are a top 5 chart pattern because they are so darn predictable. Usually the best trades are going to come above prior swings, right? So above prior swings, ideally, the best entries are going to come usually right around that first swing, that first touch of the top of that channel. In my video course, I talk about the base of that channel and the first base of the first pullback, right? So that area right there, if there's one place where we hope we'll get a pullback tomorrow, that is it right there, that 4610 area. So the spike in channel, right, is a really valuable part of this because it tells us that really anything that pops up right now will probably be seen as a selling opportunity. One more second kind of component on this, I think, and you can see how well this stuff lines up, is you can see this is a prior swing low, right? That was a prior low. Well, guess what? We can use that area now as a key area of resistance. And you can see it's obviously a coincidence, right, that it's setting up right around that 4610 to 4615 area. But I don't think you can ask for a better resistance zone when you look at how it lines up now with that spike in channel. So that's the second thing that I see as being a very, very big part of our game plan for tomorrow. And then the third thing I think is this range. This might not be the actual range, but as we always talk about in our trade room, in our video classes, trending markets like to go 3 legs. They do. In fact, you can easily 1, 2, 3 legs down. Usually when a trending market goes 3 legs, we're usually in for either a nice deep pullback, right, to attract more sellers into the market. If you're a seller down here, you might be thinking, man, this is too low right now. I don't want to sell down there. Let's get me up here. Now, I like this place to sell, right? So, oftentimes a market goes 3 legs. We're going to get some sort of big bounce off of that low, right? But if we don't get any profit taking, let's say sellers are, they're holding on to their shorts right now. Let's say if they're not getting out, this thing could definitely start to turn sideways here. And so we do want to anticipate, really any time a market makes a really big move here, 100 points, right, on the way down today. Anytime we make a big move in one day, we always anticipate the following day as a lot of potential to be a trading range, right? So, really what it comes down to is we're looking to short into these pops right now. I got a couple options here for selling areas there. We'll talk about kind of how those are different here and what they mean to us. If the buyers can miraculously turn this thing around tomorrow, not impossible, but not very probable with all this momentum here today. If the buyers can pull this, turn this thing around here, they obviously want to go back up and take out those holiday highs up there. I've got that Friday close at 64 even, so that definitely is something the buyers would love here. Other than that, though, the buyers could be pretty careful here, right? If we go sideways, we get our range, and if we start running a little bit lower here, we have another big support level at this 45.20, 45.21 area. You can't really see it very well. It's pretty far back there, but you can see that is no joke, right? That is a big sore thumb on the chart, if you will. ain't nobody going to miss that low there. So we definitely can see these bears may be able to take this thing lower here. And so we'll talk about kind of how to trade this thing as well. So how do we buy it? How do we sell it? Where are the best trades here? Again, we would anticipate any pullback right now is going to be a selling opportunity. Now, there are 4 types of pullbacks. There are 4 types of pullbacks that I like to look for. I'm going to go over a couple of them here on the S&P. I'll do a couple more on the Nasdaq, right? And then we'll kind of bring it all together on the crude oil. So if you want to learn them all, make sure you watch the entire video here tonight, and I'll do my best to kind of keep the pace going pretty well. Let's talk about, right? Let's talk about kind of what I would really like to get here right now. I'd like to get us up in these areas right here, right? Get us up in these areas right here. Now, the ideal area, again, be way up top, right? But if we get, let's say we get up into the first one, right? Get above some of these prior swings. If we can get above some of those prior swings, now what I can do is I can rope in the buyers, right? I can look for the buyers to come in now. Because again, we're so bearish. So wait for that bounce off the low. Let's see if we can get some buyers to come in and foolishly try to buy that pullback. Because if they do, all of that momentum is bearish. Big bullseye right back at that low. Think about where the buyers are coming in right now, where their stops are going to be. Or as I always say in the trade room, where's their pain, right? Where do those buyers start to think, oh, shoot, I'm wrong again, get me out? Think about where those buyers are going to be getting out there, and that's where I want to be shorting this thing, right, as we make that move back down to that low. We call these buyer failure patterns, right? Get a strong bear move down, we pop off that low, we anticipate there'll be some rookies, some inexperienced traders out there that don't understand how momentum works. They'll think we're at some support level here, and therefore they should buy this, and hopefully they will, because once those buyers commit, we can look for that short using a buyer failure pattern. Where's my target? Definitely back down to retest a low. That's one of my 4 different types of pullback setups, right? You'll notice it's not your typical pullback. It's actually a pullback failure. Now, what if we really get it, right? What if we really pop, as we, because that's what I'd love to get here. That's what I would really hope that we're going to get on this. We might not get it. And we'll talk about some shallow pullbacks a little bit later on in this video. But what if we really pop off this low? That's where the fun really happens here. If we pop off the low here, really pop back up now. Now what you want to think is this is a great place to get short. I'm always asking you guys in the trade room, how's my location and how is my momentum? Those are the 2 kind of questions you always want to think about when it comes to determining which type of entry pattern you're looking for. I'm always trying to sell at an area of resistance, right? So we get a great location. Location, check. That looks great. But what about momentum? If the market really pushes off the low, that momentum becomes a problem. That's my concern. And so what I'll do in these situations where we really bounce off the low, it's not a reversal yet. I'm now going to let those buyers try twice. Once and twice. We call this a failure pattern, right? But we call it a 2-try failure because, of course, the strength of that reversal. Now, again, think about where the buyer's pain points are, right? And look for that short down into those stops. Now, your job isn't done yet. Because we have such a nice deep pullback now we have all of this open space below. So now find a new channel off those lows, mark it off that high, think about where a little swing high is going to be, and then look for that first test trap, right? So again, it's a 2-try failure. And then think about that first test, right, off the high of that channel. My favorite entry setups off the high of that channel are what I call trap setups, failure setups, and pullback combinations. Now, as you can see, I got a lot to cover in this video. I'm not going to go over all the specific kind of entry techniques, the rules we use, which ones to take, where to get in, where to get out. I do cover all those details, but I'm not going to cover them in this video. I'll go into a lot more deeper dive into the actual entry techniques in our free trading classes. What I'll do is I'll put a little link up there for you. If you're serious about your trading right now, get this out of the way here, right? right? If you're serious about your trading right now, if you want the same roadmap that I use every day in my trading, along with hundreds of examples of all my favorite entry techniques, entry signals that we use, like failures, traps, pullback combinations, definitely grab that link that popped up there in the upper right hand corner, and you'll get a great roadmap to follow to keep you in the green if you're trading on your own out there. So we get an idea there, right? We pop up, buyers try, fail back down. We really pop up, buyers once, buyers twice, fail back down again, find that new channel, right? And again, that's where we'll drill down and find the entry, right? Failure off the high, and we'll look for the entry. Target again is back down to retest the low. Okay, at what point does a pullback become a reversal? They have to hold it. Okay, they got to hold it. So we got to get up, right? Get up of this low. The buyers have to show it, right? The buyers have to prove it to us. Okay, didn't do it there, didn't do it there, sure didn't do it there. Will they do it here? The buyers have to hold this pullback and jump. Okay, we call these 1, 2, 3 reversals, right? 1, 2 is the pullback, 3 is the jump. Okay, so I want to see it go up. I want to see these buyers come in, and instead of them failing and us selling back down, right, we're going to wait for those buyers. If they can hold, we then have that 1, 2, 3 reversal pattern. Okay, now what do you do once you get that jump, right, coming off of that low? At this point now, all the sellers who we assumed were going to sell into this area here, they're now getting blown out the water, right? They're walking away, and now we have potential for a short squeeze. Now, short squeezes are really powerful because all the bears who got short going lower, if they start to pull the plug, this thing could really rip and go higher. I'm going to talk about 2 reversal patterns right now. I've got a couple more we'll talk about a little bit later on in this video, so make sure you keep on watching. One of them, again, is this 1, 2, 3 reversal. What do we do at that point now? We find a new channel. Trending markets love channels. I'm going to mark up a trend line off that high. I'm going to bring it right down to that low, right? And think about it this way. As the market starts to really push higher and accelerate, we start finding that channel. We start looking for prior swings. We get under prior swings, right, for traps. We find those bears coming in trying to get short. We trap them in, right, with a failure. Failures often lead to pullback combinations, right? Traps set up off that low. Again, failure pattern as bears foolishly try to sell off that pullback, right? And then, of course, our pullback combination, right? Trap, failure, pullback combo. Again, I'm just simply illustrating these right now. You'll see a lot more examples of how we apply these setups to our favorite markets. It's all wrapped into that free trading course, that little quick start class, right, on our website. So grab that link. Now, there's one more reversal, and this will also apply. Remember, all of these that I'm talking about will also apply to the Nasdaq as well, because they're very, very similar in that sense today. Okay, not the oil. Oil, of course, is bullish. We're going to grab the oil here in a second. Another reversal pattern you want to keep in mind, because we have such a big move down like this. Sometimes what will happen is the market will pop up and they'll never get the pullback. And it will keep on kind of grinding, right? When it starts to grind like that, that's a short squeeze. Okay, those are all the sellers getting out. Okay, you don't need buyers in this situation. You don't need the buyers to buy this stuff going higher. If you just get some profit taking off the low and then get the bears spooked, this thing could easily grind and run higher. Okay, the grind is what makes it kind of special. What I'm going to do is I'm going to mark up a trend line off that high, right? I'm going to find that steep channel. These channels are oftentimes really steep, and just like the others, I'm going to drill down, find that trap, right? Find that failure below the moving average and do it that way. All right. So again, it might go up, pull back, and jump. That's your cue to find that new channel. Grab, right, that first test. As we always say, the first test is the best test. Or if it pops and begins to grind, it's very tempting on those types of moves to draw this big channel. All right, but I'm telling you, if we end up back to that low again, it's probably going all the way back to that low, right? So don't worry about the bigger channels here. If it starts to grind like that, short squeeze. And that's we draw that trend line nice and tight, really steep channel. Find that, right? Find those prior swings. get underneath those prior swings for traps, right? Then again, underneath the moving average, trap, failure, pullback combo, right? Now, where does the market want to go if it reverses? Where are the targets going to be? Okay, one obviously is back up to retest these highs. But a more accurate target as we go is you measure the first impulse leg going higher, right? So imagine, right, it takes off to the upside. That leg right there will be equal to that leg right there. Okay, remember, trending markets love to go in threes. Oftentimes that first leg and that final leg are symmetrical, right? It's this leg and that leg. Okay, so it's this leg and it's that leg right there. That will give you what I'll usually use as my second target, leave that runner back to those highs. All right, guys? So that's how you want to think about this as it pulls back right now. Now, what if we go sideways here? If we go sideways, not a lot changes, to be honest with you. We really have, again, bear market into a trading range. What you want to remember is if we go sideways in a range, is the range acts like a magnet. Okay, that's what ranges are. Ranges are magnets. So what you want to do is there's two ways to trade a range market with a bear bias like this. Okay, first, you always want to look for any overhead levels of resistance. So in this sense, it's very similar in that sense. We want to get up above the range. We want to try to not pick a top, right? You'll probably never see me sell into a move as it's going higher. It's just very difficult to pick a top sometimes like that. What's a lot easier and a lot more reliable, a little bit safer, is to wait for the buyers to come in and try to buy that pullback. Once they try to buy that pullback, now we know where their stops are. And now once we see that nice juicy red candle here, we can sell right into those stops. Okay, again, a buyer failure, selling above the high of that trading range. Another way you want to look at this, though, we go up, right? And again, this is assuming the market, right, runs into a range here. We get that buyer failure, and then we take off to the downside. What you want to think about is when it comes to a range, the amount we go above the range, and you're going to see this in the NASDAQ in a second, the amount we go above the range is oftentimes equal to the amount on the other side of that trading range. Okay, so we call this the pendulum swing. You're going to mark up, right? You're going to mark up, again, grab your failure, but then mark up that new channel and grab that, right, first test off the high of that channel. Now, again, this might be a trap, might be a failure, might be a pullback combination. I don't know exactly what it's going to be yet, but that is the strategy that I'm going to be using to not only short into the pop off the high, but also to trade the turn, right? And we know where the market wants to go on the opposite side, right, of that trading range. All right. Last but not least, and again, I really don't want to pick a bottom in this market right now because it is so bearish. Last but not least would be what if this market kind of rolls over and keeps going lower here? What's the game plan? The game plan is pretty simple. We're going to find a steeper channel, right? We're going to find those prior swings, and we're going to grab that first test. You know, it's simple as that, right? Trap, failure, pullback combo, right? So if it keeps on grinding lower here, don't chase that thing. Wait for it to pop because you know that all these bears right now want to sell that first bounce, right? They want that first test off the high of that channel, right? And where do you think they want to go? They're going to want to go to that 20 and a quarter. Right, that 20 and a quarter. So keep it in your radar as we go lower for tomorrow. Now, I haven't covered everything on this S&P, but that's going to give you a good idea here of how to trade the bounce, right, off of this low and what constitutes a bounce, right, to be sold or a bounce that should be bought, right? Let's keep going, though. How about some NASDAQ? Because the NASDAQ is very similar. But the NASDAQ definitely has a little bit of nuance to it, a little bit different. You can see, right? There's still that bearishness in the NASDAQ right now. But what's one big difference? What's one big difference? There's that range right in the middle, right? There's that range right in the middle. You know, ultimately what happened was we got that strong move down, much like the S&P, but instead of making lower lows and lower highs and getting that spike in channel, the NASDAQ pretty much conked out, right, and went sideways into a trading range. Sure enough, what do in a bear market to a range? You wait for the pop, you wait for the buyers to try, and you sell back down again. Then what do? You find your you find your new channel and you sell that pullback. Where's the target? It's a pendulum swing on the other side. Hey, we just talked about that, right? Yeah, so you can see that's exactly what we're looking for here tomorrow, right? I'm not making this stuff up. You can see how this, right, pretty much works over and over and over again. That is the same scenario that we just described on the S&P. Then, of course, right, the size of the breakout leg is oftentimes the size of a measuring leg. So it definitely does look like, obviously the bears have control right now, but it looks like they found themselves in a bit of a support area here. You'll also notice too that we've got this, 15,152, if you will, down there, right? Unlike the S&P, right, where the S&P has some more space to run, the Nasdaq is right there, right? It's right there. So I'll tell you right now, if there's one market right now that has the potential to really bounce a whole lot harder, I would imagine you're looking at it. I would imagine the Nasdaq has a lot more potential. On top of that, it doesn't take a big memory here to look left. You can easily see there's a range right there. So it wouldn't totally surprise us, right, if we got that full-blown reversal. So again, you can see we're bearish. There's no doubt about that, but it's a little bit difficult to want to sell too aggressively down here, right? That is for sure. So I really don't want to be too aggressive down here, but at the same time though, I think you could probably also look at this as the beginning of a 1, 2, 3 breakout here. So there probably is going to be a channel being drawn like this. So it would be a pretty good idea here to get ready for, what if we see a shallow pullback right now? Right, but what if we really get a deep pullback? Then what do? What if we get something kind of in the middle? You know what I mean? Something in between there. That's exactly what we're going to talk about here in this section of this video newsletter. So again, we've got areas overhead, right? And you can definitely kind of look at this. This could be a spike in channel. It's not a very good example of a spike in channel. Why? Because you'll notice it doesn't rotate very well, right? The range is definitely the king of, or the queen of this chart. Right? If it was a spike in channel, it would rotate back and forth like that, just like the S&P did. And then you would know that's the most important part to get short. It's not the same thing though, right? It's a range. And so the amount we go below the range, right, can be used above the range, just like it was back here, right? The amount above the range, as I mentioned earlier, can be used as a target, right, down below the range. And so that gives you the option here: up, failure, back, lower, grab that first test, right, and sell it back down again. So we have some pretty good ideas here for where the resistance levels are going to be up overhead. This channel right there is kind of speculation at this point. I think it will be wise to think about where this channel might be, right, and kind of where this might be hanging out up around there. Right, because you've got the underbelly of that range, you've got the channel right there. I don't think it's difficult to find that as a key area of resistance. Now, again, I don't really like the idea of getting too aggressive down here because of where we are. There's not a lot of meat left on this bone, if you will. So how do we sell a shallow pullback? I'm glad you asked. Shallow pullbacks are best for traps. So let's say we don't get the pullback all the way up into this area here. Right? We talked about 2 out of the 4 pullbacks on the S&P. How about the Nasdaq, right? How about a shallow pullback? On a shallow pullback, remember, I'm always asking, how's my momentum and how's my location? Okay? Momentum's great, right? Momentum's great. There's no concern there about the bulls. As opposed to if they ran all the way back up here, yes, then momentum for the bears is a concern, right? But this is not a concern right now. Momentum is great. Check that off the list, right? How about location? Yeah, that's the hard part, right? We're down inside support here. The range is a magnet. Do I really want to sell below the range? You know what I mean? That's why I say location is the challenge I have on this one. So the best way to get over the location problem is with a trap, right? With a trap. Now, these are a little bit tricky, right? You'll get a hang of it though. I'll talk a lot more about these pattern setups in that free video course that's linked up in the upper right-hand corner. But what you want to do is you want to try to get short as high as you can sell. You want to sell as high as possible. So what I usually do is I'll find those new channels. You can see where that kind of underbelly of that range is. You can easily see that'll be a spot to keep an eye on, but just wait for it though, because it may try to go and may rip up into that range anyways. So 1 try for the bulls, 2 try for the bulls. Just think about, give me a trap, right? Give me a trap set up. A trap will go above a prior swing, right, for that short. There's not going to be a lot of space down here to add more to it. All right, we'll talk about how to do that here in a second. As we go higher here, right? As we go higher here, this is where, again, we start thinking about those buyer failure into pullback combinations, right? This is where you start thinking about, okay, let's get up into areas of resistance. Let's let those buyers try. Again, I'm not going to sell into this area, right? But I will wait for that first pullback. If that first pullback holds, right? And we'll talk about this in a second here, right? But if it fails, I'm looking for that failure pattern. Then again, I always like to kind of keep a little bit of powder dry, if you will, right, for that first pullback as we go, right? So failure into pullback combination. Where's my target? Yeah, back down to retest the low. We're sitting at major support down there. Okay, now, one more pullback here, right? We didn't talk about this one yet. What if we do something like this? What if we bounce off that low, right, and we run back up here now? Now what do we do? Right? Oftentimes what will happen is you'll get that bounce, the market will run higher. Now what do? Now we draw a trend line right up underneath this low, right? And that trend line is your very best friend, right? That trend line now, we call these 2-legged pullbacks, right? So 1 leg and 2 leg. Now, don't get me wrong. Sometimes, right? Sometimes these will go 1, 2, 3. So it could be 3 or 4 legs, right? But what you want to do is you want to try to get underneath that trend line and use it as resistance. Now, what I'll usually do in these scenarios is I'll usually look for either a combination of that failure setup or that 2-legged pullback. In other words, I can sell off the trend line, right? That will be the ideal place to short. But if for some reason we don't get a good signal off of it, or whatever the case may be, right, that failure into that, and again, because it's so such a nice big bounce, that 2-legged pullback into that failure, grab that new channel and hit that new channel, right, as we come off that high. Make sense? Okay? And then if the market was to really push higher here, this is where we have to think, okay, I've got plenty of resistance up top here, right? Great location because you got that range below us, right? But they're going to have to really we have to wait for the 2-try rule now, right? Momentum's a big problem. So as the market runs higher now we go, okay, let's give them 2 tries. 1, right? Let's give them 2. And then again, don't forget, this is where the pendulum swing really comes into play, right? This amount above, that amount below, that's where they want to get back down to. So we grab our 2-try failure, grab that move going lower, find that new channel, think about those traps, right? First test is the best test. And again, I'm just simply, drawing it up here right now, but you'll see more of the rules we use and the pattern selection on the, what charts to use on this, right? This is a 5,000 tick chart. We're not trading a 5,000 tick chart, right, on our faster time frames, right? We'll drill down. We'll talk more about that stuff in that free trading class, right? But we pop up off the low. Again, big pop back up. It makes perfect sense, right? It makes perfect sense to get this thing to go back to this area here. Because again, we're sitting at major support. The range, of course, can rotate back and forth pretty easily. There's that short coming in off that high. Okay, now at what point do we start looking for longs, right, on this market right now? Again, because we're so bearish right now, it's really difficult for us to want to buy this market. I think the only way I would buy this market right now would be if we were to see a pullback, a retest, right? Just get those bears out of the way, and then use that 2-try failure. But what I would look for is a 2-try failure with a trap entry, right? So 1 try for the bears, 2 try for the bears. and that trap. Okay, these are about as bulletproof as you're going to get when it comes to entries. Okay, now please don't mistake this. Okay, I want to see a move up. I want to see them retest that low. Okay, really get that retest. Remember, anytime we see a nice strong push, we know there's a good chance they're going to retest that same area. So let them retest it. Then start roping in those bears with a 1 try, with a 2 try, and grab that trap, right? Grab that trap. Now, I'm not going to lie, right? You'll see times where we get stuff like this where it'll be a trend line entry, like that. And I'll definitely take those as long as the trend line is relatively flat. Okay? What you don't want to do is go doing something like this. It's going to make me do it again, right? If it bounces off that low like this, what you don't want to do is go 1, 2 like this. Okay? That's why I said that trend line needs to be really flat. All right? If it's steep like that, you're running right into those bears again. It'll go right up for you and come crashing right back down a lot of times, right? So what I'll usually do is, again, that's why I said earlier, you really want that 1, that 2, and that trap, right? Especially if it runs up like this, 1, 2, that's exactly where you want that trap, because there are going to be more bears waiting above that high here, okay? So again, grab that 1, 2, right? The flatter you can get that trend line, the better, right? Retest that low, 1, 2. See, now that's a trend line you can get down with, right? Because you've got more bears, but they're waiting way up here, right? You're buying way down here. You've got some open space to work with, right? But if you're trying to get long way up here now, right? You're buying right into where in a bear market you would anticipate more bears coming in. Make sense? Right? I hope that makes sense. If not, let me know in the comment section below, right? We want to buy a reversal, again, after we get that retest, and then as low as possible, which generally means a trap right below that low. And again, we're gonna do all this together tomorrow morning in the trade room, right? So we'll make sure we keep you guys out of trouble there. Then, if we do get the reversal going higher here, right? Let's say, for example, the market does 1, 2, 3 and runs back up. I just think you're gonna see a lot of bears up here, right, waiting. So if we can get up in this area, hold that pullback, and get through that pendulum swing, that's where you start looking for the longs. All right. Now, don't get me wrong. I get it. I don't want to wait for it to go all the way that distance either. But, that's just the way that's the way that bear markets and ranges are going to work, right? The amount we go below the range is the amount we go above the range. You might be able to kind of thread the needle, somewhere like this and find a new channel. You know what I mean? Like maybe you thread the needle there. So there might be something there, get that 1, 2, 3 reversal and then quickly grab, that little pullback right there. But again, you get yourself a very tight space there. Just make sure that you have enough momentum coming off that moving average, right? Remember, it doesn't matter how strong the bounce is. It does not matter if this thing bounces hard off this low. If it bounces hard off that low, I'm going 1, 2, and looking to short this thing right back down again. Right? But if they can bounce hard off that low, and if they can hold that pullback and jam it higher, see, again, this is where it's going to be difficult. You got to get enough momentum for the bulls without then, buying right into that pendulum swing. Don't underestimate these pendulum swings. They're very, very powerful, and the gig is up. People know it's time to short these markets right now. They're not buying the dips as much as they were a few weeks ago, right? Back at the end of the year, right? Triangle top, pendulum swing top up there. This is where you're thinking 1, 2, back down, right? Find that channel and go from there. If we can get that 1, 2, 3 go, then absolutely. Then we'll find that new channel. We'll drill down, right? And we'll grab that first test. This is definitely one of those markets that could give you a short squeeze, right? It could pop and start to grind and grind and grind and grind, right? It definitely could, that pop and grind, right? Where we push through that pendulum swing and keep on going. If that's the case, fine, right? Grab that trap, grab that failure, that pullback combination. But again, hopefully you can see though, I'm I'm very conservative here on buying it as it goes higher, because you're going to be walking right into more sellers. So wait for the proof, or you're on your own to thread that needle, right, going higher there. And again, I'm not so concerned about picking a bottom on this, as long as we can get that retest and get that 2-try reversal. You'll learn more about that stuff in the video course I keep talking about. All right, what if we keep going lower? What if we keep going lower? What if this thing takes off and runs lower here? That 15,000 looks pretty lonely down there. It definitely does, doesn't it? 15,000's got a nice little ring to it. So if they really, right, if they do get that breakdown and going lower here, right, again, we've got some major support here at 15,152 or so, right? Just make sure you get that nice strong push right through those lows. Don't chase after it, right? Find those new channels, mark up those swings. It would make perfect sense to use that support level as an area of resistance for a trap, right? For that failure and that pullback combination. And then remember, right, the size of that breakdown leg we can easily use here, right, as that measuring leg. The 15,000 is the obvious kind of magnet down there, but the measured move will give you more precision as far as where those final targets, right, surely should be. All right, guys? And again, we're going to cover a lot more of this tomorrow in the trade room. Let's keep going here over to some oil, right? Got a lot more to cover here on the oil. We're getting a little bit late in this video right now, so I appreciate you still hanging out with me here tonight. How about some oil? What do we got going on the oil right now? Boy, what a difference a chart can make, right? Very different here. We're definitely bullish here on the oil, right? Market pretty much makes a strong pop up into a trading range, right? The buyers, of course, are buying the dips. They're buying the dips. They're buying the dips. And eventually, it pops and runs. Now, what did we just talk about, right? We just talked about whenever it was bearish before. What do you do in a trading range, right? You wait for the breakouts, the failures, and you buy it back up, right? You wait for the breakouts, the failures, and you buy it back up. Where's the objective on the other side of that trading range? You take the amount below, you take the amount above, right? That's symmetry. You can see they stalled out for a little bit, but they got the proof. This is the type of proof we're going to want to see in the Nasdaq tomorrow. Right? We're going to want to see him get up to that pendulum and then push right on through it. Now, this one obviously was a bull market to begin with, so it didn't take much pushing, right, to push through it. But now we have a situation where we have a very strong run higher, right? Remember, anytime we see a real strong move in one direction, what do we know? We know the odds are pretty good. We're going to retest that high, right? So it'd be nice to find some support levels here for us to buy off of, right? In comes that prior swing high. That becomes a key area of support. Here comes that new bull channel. That becomes a key area of support. And you can easily see there's a really nice confluence there around those areas. I think my only concern right now here on the oil is just location. We're kind of in the middle of nowhere right now between 85 and 90. We've got this breakout leg is the measuring leg, and that, of course, could easily turn to a range up here. Honestly, a range up here wouldn't be bad at all, because we could do the exact same thing that we saw today, right? Think about it. We may see tomorrow what we got today, right? Pop up into a trading range. Just like today, pop up into a trading range. Okay, if we do keep going higher, I've got some pretty good levels there above me. 86.30, 86.50, and then from there, we're kind of in uncharted territory here over the last 7-8 years here. There's not much else up there until we get to the big 90, right? Which is obviously a very attractive number if you're a bull here, right, on the oil. So how do we buy it? How do we sell it? I'll tell you, there could be some nice shorts setting up here on this oil, but I want you to think about what I just talked about in the Nasdaq, right? How to trade that reversal. And we'll talk about that here a little bit later on here. So as we go higher here, I'd like to buy a pullback, right? I'd like to buy a pullback. My biggest concern on this pullback is going to be the fact that we technically have already reached our objective, right? Measured moves are very common in a range breakout. The size of the breakout leg is the size of that measuring leg. So when I get the pullback here on this, I'm definitely concerned that we might see sellers come in and try to short back into that range here, or we may end up getting even lower here, right? And end up getting dragged back below that area. What was support could be back to an area of resistance again. So if we get the pullback here, right, get that pullback here, my biggest concern, again, is that range below us acting like a magnet, and we basically have finished off, right, that measured move. If the market goes lower, I'm going to look for that same two-try failure. Let those bears try once, let those bears try twice, right? Trapping those bears, trying to short back down in. We get all that momentum, right, for the bulls. All the stop losses here now for those bears are sitting right above that high, and that should be enough to kind of rope in, right, those bears. It'll look a lot like this, right, where it pulls back, the bears try once, the bears try twice, back up. We pull back, the bears once, the bears twice, right, and back up. So think about these types of price action patterns on that pullback here, right, on the oil. And it really, that would also be, even if we get a little bit underneath this area, right, even more important there. One try for the bears, two try for the bears. If we see a really deep pullback, then maybe we get lucky. Maybe we get lucky with enough space up there. We can now go in, find that new channel, mark up that, right, that prior swing, and get that trap low. You know, a little two-try failure into that trap or that first test, right, off of that low. So these are ways I'm looking to trade a pullback, right? Now, obviously, if this pullback was to hold, you know, if they were to get underneath the moving average, hold the pullback and jump going lower, now you know what's up now, right? Now you know those bears, they want to take out those lows, right? They want to go back to last Friday's close, 83, right, 63. They've got a big pendulum swing now. That pendulum is probably a little too big to use for our targets tomorrow, but you know where they want to go. They want to go back to retest the low. Doesn't look like this is likely, but hey, we're traders, right? We're not in the prediction business. We're in the reaction business. We see what we react to what we're seeing, and we trade what we see. So if we see it pull back deep and they hold that pullback now, mark up that low, mark up that high. Again, I don't know what entry pattern or entry setup I'm going to use on this one tomorrow, right? But I will definitely be looking for a bull trap, a buyer failure, a pullback combination off that first test, right? And then remember, that leg right there, right? That leg right there equal to that leg right there. Again, we know where the market wants to go, but those measured moves will they'll fine tune it for us, right? And give us those nice, juicy, big final targets there, right? That's one way I can short this thing. Now, here's another way to short this as we open up here, right, in Asia, and the market pops higher here. Here's another way to think about, right? Oh, here we go, right? Buyers, of course, now making my job easy, right? Showing me what they're going to do next here. So we run up now into our zone up here. We find our new channel, right? We pull back nice deep, right? Get underneath that moving average, trap in 1, 2, failure, and back up to retest the high, right? Now, imagine this. Imagine now we get that pullback, we retest, right? Remember, that's a key component to a reversal. And then what do? Right? Then the buyers try once, they try twice, right? Think about that. Think about that trap off the high. Think about that trend line off the high, right? Buyers trying once. Remember, the key is give me the retest, right? Give me the retest. Then buyers try twice. Maybe it's a trap. Trend line, doesn't really matter, right? Once we see that nice strong red candle, the market now will likely take a nosedive back down again. We know we have that range acting as a magnet. So what do? We don't chase it lower. We mark up that new channel. We find that channel high, and we definitely want to grab that first pullback. The first pullback is always the one you want to go looking for. Okay, as the market drops, keep drawing that channel tighter, right, and keep waiting for that first pullback. And again, I say pullback, right? It isn't necessarily a pullback setup, so to speak. It's usually going to be a trap or a failure. Again, you'll learn those favorite setups in that free quick start class. All right, so watch that for the reversal, right, as we go. What if it goes sideways up here? Very, very likely, right? Very likely goes sideways up here. What do we do if this market goes sideways? We pretty much do the same thing we did today, right? We find that trading range. We oftentimes will use the size of this range to find our levels of support below, right? What I'll usually do is go looking left and find some trend lines over here, right? Put some trend lines over there as well. Get underneath that trading range. Remember, we're bullish. The range is a magnet. We rope in those bears, right, with that seller failure pattern. And then remember, mark up the amount below, mark up the amount above. That's where they're looking for. Find that new channel as we go, right? And trade the turn, right? Trade that turn. Again, if it's a range-bound market with a bull bias, find levels of support below the range, right? I will get creative tomorrow in the trade room if we need to. And then, of course, we'll rope in those bears with a failure and then grab that first. Again, I say pullback. It could be any of the price action entries that you learn in that quick start class. All right, so that's how you want to think about this as it pulls back here, right? Or if it goes sideways. If it keeps on grinding higher, like I mentioned earlier, if it keeps grinding, then you start thinking, okay, I've got to find a way in off a trap, get me again, it keeps on grinding higher overnight. It's just a matter of getting that trap, that failure, that pullback combo off of that low. So will we see this range up at these highs? It's very likely. Will we see that nice juicy pullback, trap in some of those counter trend bears and run it right back up to retest the high? That is very likely. Will we see that reversal off the high into that new channel? Oh man, we can only hope for it. We can only hope for it. But as you can see, guys, there is no shortage of tradable opportunities on Wednesday's trading session. Guys, I've covered a lot in this video right now. Thank you so much for sticking around all the way to the end. Don't forget, I'm going to put all of the free trading course material, all the membership classes, all the trading sessions. I'll put all those links right below this video tonight on the trading blog, or I'll put it right in the description of the YouTube video. So grab those, get registered right on the website. If you have any questions along the way, don't be afraid to call the office. I've been more than happy to answer questions about brokers and data feeds and chart providers and all the details to get you ready for trading with us in our trade room. So if you have any questions, drop me a comment in the comment section below. And I hope by now you subscribe to our YouTube channel, because as you can see, I am bringing the good stuff here this week. It's a short week, but that's all right. I'm going to make it count. I'll see you guys tomorrow morning, 8 o'clock Eastern time in the trade room. If I don't see you tomorrow morning, you better come back and join me again tomorrow night. Same time, same place, same great stuff here on this YouTube video. Guys, as always, thanks for tuning in. My name is Joseph. Now get out of here. Enjoy the rest of your evening. I'll see you tomorrow morning. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye for now.